Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Markets started 2022 with a bit of a bang for investors. In the first week alone, we have seen the S&P 500 fall over 1.0%, with a notable rotation underneath the surface. Growth sectors like technology and discretionary underperformed, while more value sectors like energy and financials held steady. This rotation has been driven primarily by a sharp rise in yields, with the 10-year Treasury yield going from 1.34% in early December to around 1.75% this week. This has put pressure on assets that are considered long duration and have loftier valuations, like parts of technology, as well as on assets that are considered bond-like, such as utilities and real estate. Important economic data being released this week include the PMI index and hourly earnings growth. Our first stock type is dividend earning stocks. These are a great way to earn passive income. This week's suggestion is Lowe's, with ticker symbol LO. Lowe's Companies Incorporated is an American retail company specializing in home improvement. Founded in 1921 and headquartered in Mooresville, North Carolina, the company operates a chain of retail stores in the United States and Canada. Lowe's is the second largest home improvement retailer in the world, operating 1,973 stores and servicing 230 dealer-owned stores. The firm's stores offer products and services for home decorating, maintenance, repair, and remodeling. Lowe's targets retail do-it-yourself and do-it-for-me customers as well as commercial business clients. It also offers installation services through independent contractors in various product categories, extended protection plans, and in warranty and out-of-warranty repair services. The company sells its national brand name merchandise and private branded products to homeowners, renters, and professional customers. Marvin Ellison serves as the President, Chief Executive Officer, and Chairman of Lowe's since July 2018. Some technical analysis data shows that Lowe's return on equity is 25,077.9%, its average volume is about 3.29 million, its market cap is $169.17 billion, its beta is 1.29, its PE ratio is 21.9, its PEG ratio is 1.42 and its EPS is $11.47. Our rating is 10 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Lowe's in the last 3 months, the average price target is $282, with a high estimate of $300 and a low estimate of $240. With current price at $251.09, this would mean about 12.3% average profit over the next year. Lowe's pays an annual dividend of $3, which amounts to a dividend yield of 1.19% and a dividend growth of 33.33%. The ex-dividend date is the 18th of January, so buying a Lowe's stock by then will pay you 80 cents on 2nd February. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Block, with ticker symbol SQ. Block Incorporated is an American financial services and digital payments company. Together with its subsidiaries, it creates tools that enable sellers to accept card payments and provides reporting and analytics, and next-day settlement. Square Incorporated, the corporate owning entity, retitled itself as Block Incorporated on 10th of December 2021. The main payments product for small businesses is still titled Square. Square is a payments platform aimed at small and medium businesses that allows them to accept credit card payments and use tablet computers as payment registers for a point-of-sale system. The company also runs Cash App, a mobile app that allows monetary transfers both among users and between users and businesses. In addition, it offers a developer platform, which includes application programming interfaces and software development kits. Further, the company provides Weebly that offers customers website hosting and domain name registration solutions. It serves in the United States, Canada, Japan, Australia, and the United Kingdom. The company was founded in 2009 and is headquartered in San Francisco, California. Jack Dorsey is Block's co-founder, chairman, president, and chief executive officer. Some technical analysis data shows that Block's return on equity is 20.2%, its average volume is about 8.34 million, its market cap is $65.29 billion, its beta is 2.38, its PE ratio is 141.97, its PEG ratio is 1.76, its EPS is $1, and its asset growth is 71.42%. Despite our rating as 7, we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Block in the last 3 months, the average price target is $276.62, with a high estimate of $360 and a low estimate of $190. With current price at $141.54, this would mean a 95.44% average profit over the next year. In the third quarter, the tech giant recorded $3.8 billion in total revenue, 27% higher than the year-ago period. Block reported a total gross profit of $1.1 billion during the quarter, representing a 43% year-over-year increase. Its seller ecosystem contributed $606 million in gross profit, jumping by 48% compared to the third quarter of 2020. In addition, its Cash App's gross profit came in at $512 million, 33% higher than the prior year quarter. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is McDonald's, with ticker symbol MCD. McDonald's is the largest restaurant owner-operator in the world, with trailing 12-month system sales of $109 billion across 39,680 stores in 119 countries. McDonald's pioneered the franchise model, building its impressive footprint through partnerships with independent restaurant franchisees around the world. The firm earns nearly 60% of its revenue from franchise royalty fees and lease payments, with the remainder coming from company-operated stores across its 3 core segments: the United States, internationally operated markets, and international developmental or licensed markets. McDonald's owns 55% of the real estate and 80% of the buildings in its franchise system, offering it substantial leverage in maintaining quality standards and consistency. As of 2020, McDonald's has the 9th highest global brand valuation. The company was founded by Richard and Maurice McDonald in 1940 and is headquartered in Chicago, Illinois. Chris Kempczinski has been the president, chief executive officer and director of McDonald's since November 2019. Some technical analysis data shows that McDonald's return on equity is -109.8%, its average volume is about 2.67 million, its market cap is $199.56 billion, its beta is 0.58, its PE ratio is 27.53, its PEG ratio is 2.14, its EPS is $9.70, and its return on capital is 11.1%. Our rating is 9 and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for McDonald's in the last 3 months, the average price target is $281.56, with a high estimate of $314 and a low estimate of $260. With current price at $267.06, this implies a 5.43% upside potential over the next year. McDonald's stock performed well in 2021, appreciating 25%. The biggest reason for McDonald's robust stock performance last year was that the company rebounded from the COVID-19 pandemic amid increasing vaccination rates and easing restrictions. This led to McDonald's revenue soaring 23.9% to $17.21 billion through the first 9 months of last year. McDonald's adjusted EPS also skyrocketed 75.8% higher year over year to $7.86 through the first 3 quarters of last year. As it has for so many years, McDonald's looks set to have a fine 2022 full of growth. Investors should also get a few more coins in their pockets, as the dividend aristocrat will almost certainly bump up its payout again. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Tilray will release earnings on Monday 10th January. Sinex Corporation will release earnings on Tuesday 11th January. Infosys will release earnings on Wednesday 12th January. Taiwan Semiconductor Manufacturing Company and Delta Air Lines will release earnings on Thursday 13th January. Finally, JP Morgan Chase, Wells Fargo, Citigroup and BlackRock will release earnings on Friday 14th January. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 10th January is the ex-dividend date for MSC Industrial Direct and Guarantee Federal Bank shares. Tuesday 11th January is the ex-dividend date for Interdigital and Winnebago Industries. Wednesday 12th January is the ex-dividend date for Accenture and Global Net Lease. Thursday 13th January is the ex-dividend date for AbbVie and General Dynamics. Finally, Friday 14th January is the ex-dividend date for the PNC Financial Services Group and Hormel Foods, among others. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. A few initial public offerings have been arranged for next week. JustWorks Incorporated, with ticker symbol JW, will be listed in NASDAQ Global Select. There are 7 million shares offered at a price between $29 and $32. JustWorks is a cloud-based software platform that gives small and medium-sized businesses access to benefits, payroll, human resources, and compliance support, all in one place. Over 8,000 customers across all 50 U.S. states, representing almost 140,000 worksite employees, trust JustWorks as their human capital management platform. TPG Partners LLC, with ticker symbol TPG, will be listed in NASDAQ Global Select. There are 33.9 million shares offered at a price between $28 and $31. TPG is a leading global alternative asset manager with approximately $109 billion in assets under management. The firm has been built through a 30-year history of successful innovation and organic growth, and it is believed that it has delivered attractive risk-adjusted returns to its clients and established a premier investment business focused on the fastest-growing segments of both the alternative asset management industry and the global economy. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.